We do have a tax levy hearing at 6:45 tonight, so we'll be starting that in a few seconds. I'd call a public hearing to order for the Village of Round Beach for Monday, December 9th, 2013. This is our tax levy hearing. Please call the roll.
Trustee Husk. Here. Trustee Valdez. Trustee Smith.
Here.
Trustee Butler. Trustee Mount.
Here.
Trustee Mattingly. Mayor Hill.
Here. Let the record show there's a quorum present.
Trustee Valdez.
Okay, let the record show a quorum is present. Can we have a motion to allow Trustee Butler to join us electronically? Motion by Trustee Mount, second by Trustee Smith. All in favor?
Aye.
Opposed? Welcome, Trustee Butler.
Good evening, Mayor and trustees. Thank you.
Is there a motion to approve the agenda?
So move. Second.
Motion by Trustee Smith, second by Trustee Mount. All in favor?
Aye.
Opposed? Great, and we have just one amendment of business on this. It's a tax levy hearing, so I'll turn it over to Brian Gosnell, our Finance Director, for the 2013 tax levy presentation.
Thank you, Mayor, members of the board. The purpose of tonight's meeting is to hold a public hearing for the village's 2013 property tax levy. Before we get into the tax levy, I just wanted to give a brief overview about some of the challenges that local governments are facing. The National League of Cities compiles a report annually on the fiscal health of municipalities. This is a survey. It was responded to by over 350 municipalities. Nearly half have a population between 10,000 and 100,000. And a glimmer of small good news. The report shows for the first time in 7 years a year-to-year increase in general fund revenues, albeit only 0.1%. But the arrow is pointing in the right direction, and it's a positive trend. The report also shows factors impacting local fiscal health. On the negative side, no surprise here, rising healthcare, pension, infrastructure, and price increases versus declining federal and state aid. On the positive side, local tax base and overall economy were two factors that were reported as positive. So again, a couple positive signs as communities have started to adjust to the new operating environment, or some have. We start to see a positive impact. The report also shows 4 years of data on how municipalities have dealt with or are dealing with the current economic climate. Interestingly, 38% are still reporting hiring freezes, and 17% are still reporting layoffs. Now, these two categories were much lower in 2010, but I think it shows that there are some municipalities still struggling to adjust to the economic climate. The village responded to the economic situation by adopting and implementing a philosophy that focused on balancing the revenue and expense equation through operating efficiencies as opposed to just revenue increases. Excuse me. Those efficiencies include the introduction of technology, some privatization, partnering with other agencies, looking at processes and how we can deliver those more efficiently, and then targeted staffing efficiencies. As a result, full-time positions in the village have gone from 99 to 83. That's almost a 20% reduction in workforce with no impact to services or service delivery. Also no impact to planned capital expenditures. One thing the village also did was take the opportunity to update some long-term planning, including a financial forecast and a long-term capital plan. One of the things the financial forecast shows is that it's important for major revenues, including one we're going to talk about tonight, to at least keep up with inflation. That brings us to the proposed 2013 levy. As you know, the village has not raised the tax levy for the past 3 years. Again, choosing to focus on the expenditure side and long-term planning. The proposed levy for 2013 reflects just an increase of just 1.7% over the 2012 levy and a 1.31% increase over the 2012 extension. Small increase is equivalent to the CPI, or Consumer Price Index, which is used by non-home rule communities in calculation of the tax cap. Although the village is not bound by the tax cap as a home rule community, that is the indicator of inflation. The increase allows major revenue stream, such as property tax. It allows the property tax revenue stream to keep up with inflation, and the village to make a commitment to the long-term capital plan that is currently under production. The proposed levy totals $2,442,835. That is a $40,835 increase over 2012. Village utilizes property taxes for many purposes. The corporate levy is used to pay for general services. The liability insurance levy is used to pay for the village's liability, property, and workers' compensation insurance programs. We also levy for IMRF and police pensions for those liabilities. Overall, the property taxes account for about 24% of general fund revenues. If you exclude the police pension, the largest levy, it makes up about 13%. This chart shows a breakdown of the proposed 2013 levy with the police pension and corporate levies coming in at 41% and 40% respectively. Based on preliminary information from the Chief County Assessor's Office, it is expected the village's EAV will once again drop roughly by 7 or 8%. That will drop the EAV from $343.5 million roughly to about $320 million. Estimate is prior to adjustments from the state and county, so it likely will change. As a result of the proposed levy and the decline in EAV, the village's tax rate is projected to increase from 0.702 to 0.765. This chart shows the percent change in the village's tax levy from 2008, which is the start of the most recent recession or downturn. You can see for the last 3 years there has been no increase in the levy, and then the 1.7% proposed for 2013. Overall, the village's portion of the total rate or predominant rate as reported by Lake County, the village's portion of that makes up about 5.5% of the total tax bill. Other agencies make up the rest. Some of those agencies are more reliant on property tax to deliver those services. If you look at the village's portion of the predominant rate over time, it is a smaller and smaller portion of the overall rate with a slight increase from 2008 to 2009. So what this shows is that of the overall rate, the village's portion of it is getting smaller as taxing districts, like I had mentioned before, are more reliant on property taxes and use those property taxes to increase their revenues. The village's share declines over time. Impact of the proposed levy: a resident with a home value of $150,000 in 2012 paid about $351 in the village portion of the property tax. Again, remember that's only 5.5% of the total. That same resident will pay about $382 in 2013. Again, that's assuming the value of the home has stayed the same, and we know that's not likely the case. If the value of the home drops by 8%, excuse me, that resident will pay slightly more, approximately $352. And that concludes the presentation. I'm happy to answer any questions. Approval of the levy is on the agenda on the regular board meeting tonight, so happy to answer any questions, and go Bears.
Any of the trustees have any questions on the tax levy presentation? It's pretty straightforward. As Brian said, we've been trying to hold the line for 3 years in a row. Just couldn't do it for 4 years in a row, 100%, so we're just going up to 1.7%. And our piece of pie is getting smaller and smaller, but we're going to continue to make ends meet as best we can. Anyone in the audience have any questions on the tax levy hearing? Well, it's nice to have an audience for that. I don't think it was intentional, but thank you for being here. If there are no questions, then I ask for a motion to close this hearing. Motion by trustee Mount, second by trustee Smith. All in favor? Opposed? Okay, this hearing is closed. We'll start our board meeting in about